Greetings. Welcome to CEC Gurukul lectures. In the series of financial accounting, we are discussing the topic branch accounting. In our previous lecture, we already talked about the concept of branch accounting, the classification of branch in accounting, that is dependent branch and independent branch. We also talked about the methods of this dependent branches, that is data system, stock and data system. In today's lecture, we are going to talk about how to prepare the branch account at invoice price, how to prepare the branch account under the system stock and data system. When the business grows in size due to increased production or sales, the large organization generally set up a local retail shop, and these local retail shops are known as branches, and these branches are controlled by the head office. So head office is therefore a place from which the branches are controlled, and the branch, it acts like a retail shop who sells all the goods which are supplied by the head office further to the customer, and this branches remitted all the cash which are received by the branches to the head office. So branch may be defined as an establishment which is a segment of an enterprise geographically separated from the main establishment, carrying on the same or substantially the same activities as that of enterprise and acting under the directions and control of the head office. We classify branches into two categories, that is inland branch and foreign branch. Inland branches are those branches which are situated in the same country in which head office is situated. For example, the head office of any of the company is situated in Mumbai, and the branch of that particular company is also in the same country. For example, let's say it is in Delhi. So the head office and branch both are situated in the same country. This is the example of inland branches. So inland branches are those branches in which both head office and branches both are situated in the same country. Whereas the foreign branches are those branches which are situated in any other country outside the head office, other than the head office. For example, head office is situated in Mumbai, that is in India, and the branch of that company is situated outside the country, outside India, that is, for example, let's say it is in Dubai. So this is the example of foreign branch. We further classify inland branches into two subcategories, that is dependent branches and independent branches. Dependent branches are those branches who are dependent upon their head offices. These branches are dependent upon their head offices for all the activities. So they are dependent for their for maintaining the accounts. They are small in size. Why they are small in size? Because the transactions which are done by these branches, dependent branches, are very less. So accounts are maintained by the head office of these type of branches, and this type of branches, they act like an agent. So dependent branches is a branch who is dependent upon head office for all the activities. So basically these branches, they act like an agent, and all the goods which are supplied by the head office to these branches are further sold by these branches to the customer. Whereas independent branches operate independently within the broad policies which are laid down by the head office. They maintain their own accounting system. Accounting methods which are adopted by the dependent branches. We already talked about this. What are the dependent branches? Dependent branches who are dependent upon head office for all the activities. Now the question comes to our mind, what methods of accounting are adopted by the dependent branches? Basically, there are four methods which are adopted by the dependent branches for accounting. The first one is data system. This is also known as debtors method. The second one is stock and data system. Third is final account system and wholesale branch system. So in this series, we are going to talk about the first two methods, that is data system and stock and data system. When we talk about how to prepare or how to calculate the profit or loss of branch under the dependent branches system, so the first method which comes to our mind is debtors method or data system. Under this system, under this debtors method, the head office opens only one account for each branch. For example, there are 3 branches of head office. One is in Delhi, one is in Mumbai, and one is in Jaipur. So basically, head office is going to prepare the account of all these 3 branches in their books, and all the transactions which are relating to the branch are recorded in this account. So under the debtors method, only one account is prepared, and this account is known as branch account. This system of accounting, that is debtors method, this method is basically adapted by the branch when the size of the branch is very small. That means when the transactions are very less, this method is generally adapted for calculation of profit or loss which is earned by the branch. A branch account is a combination of personal account and nominal account. The account which is prepared by the head office in its book, this branch account is a combination of personal account and nominal account. In the first lecture of the series Financial Accounting, we already talked about the types of account. So there are 3 types of account, that is personal account, nominal account, and real account. And the branch account which we are talking about in this lecture, this account is a combination of 2. That is personal account and nominal account. Personal account, reason being because head office treats its branch as a debtor. And why it is a nominal account? Because this branch account is prepared to calculate the profit or loss which is made by the branch. So whenever any account is prepared to ascertain the profit or loss, that account is known as nominal account. So the account, that is branch account, which is prepared by head office, is a combination of 2 accounts, that is personal account and nominal account. The transaction which takes place between the head office and the branch. So only those transactions which takes place between the head office and the branch are going to be shown in the branch account only. All those transactions which are related, which are with the branch and the third party are not going to be depicted in the branch account. The reason is simply this branch account do not depict all those transactions which takes place between the branch and the third party. It records only and only those transactions which takes place between the head office and branch, because I just told you that branch is a personal account, and it treats this head office treats the branch as a debtor. So because of that reason, only those transactions are recorded in the branch accounting which takes place between head office and the branch. All those transactions which takes place between the branch and the third party are not going to be recorded in this branch account. This is very important thing which you need to consider while preparing this branch account. So all the items which are related, which are in between branch and the third party, are not going to be depicted in the branch account. That is, if cash sales or credit sales or goods written by debtor are given in the question, they are not going to be recorded in the branch account. Similarly, if any item which is pertaining with the debtors, so debtors are branch debtors, so any item which is related with the debtors, that is bad debts, discount allowed, expenses incurred by the branch, if these items are given in the question, so they are related, they are in between the branch and the third party, so these items are not going to be recorded in the branch account. Similarly, the items which are related with the loss of stock, that is normal loss or abnormal loss, if these items are given, then these items will not be depicted in the branch account, because these 2 items do not in between this head office and branch. So basically, when we prepare the branch account under this debtor system or debtors method, only thing which you need to consider here is only those transactions which are in between head office and branch are going to be recorded in the branch account, otherwise they are not going to be depicted in the branch account. So independent branches, the method of accounting which we are discussing here is debtor system, that is debtors method, and in debtors method only one account is prepared, and that is branch account. And this branch account is a combination of 2 accounts, that is, this may be personal account or this can be your nominal account. So branch account can be prepared at cost price or this can be prepared at invoice price. So we already talked about this how to prepare branch account at cost price in our previous lecture. In today's lecture we are going to talk about how to prepare the branch account at invoice price. So this is very important. Generally only this branch account at invoice price, this comes in the examination problem. So how to prepare the branch account at invoice price? First let me explain you what is invoice price. Invoice price is cost price plus profit margin, which is generally known as loading. So invoice price, if it is given in the question that invoice price, that means this depicts cost price plus profit margin. So before we proceed further, let me explain you how to calculate the markup calculation or how to understand the concept of invoice price. So in this example, it is given that as limited invoice goods to its branch at daily at a cost plus 25%. So it is given here that it is the goods are invoiced from the head office to its daily branch at cost plus 25%. The first thing which you have to see in the question is what is given in the question, whether it is a cost plus percentage or it is a percentage, profit percentage is given on cost or profit percentage is given on selling price. Now what you need to find out here, you need to find out the load on cost and load on invoice price. So whatever is asked in the question, you have to act accordingly. So how to calculate the markup price? So what is given in the question, that it is cost plus profit percentage, which is 25%. So you need to see the percentage is given on cost or the percentage is given on selling price. So in this question, the percentage is given on cost. So let's assume cost is 100. If the cost is 100 and the profit margin is 25, so your selling price would be 125. So how to calculate load on loading? Loading is a profit margin. How to calculate load on cost? So the formula is markup upon cost. That is, the markup price is markup percentage is 25 and the cost we have assumed is 100. So this is 1/4. How to calculate load on invoice price? So if you need to calculate the load on invoice price, so the formula is markup upon invoice price, and this is 25 upon 125. How to calculate this invoice price? If your profit percentage is 25 and the cost is 100, the selling price or invoice price would be 125. The fraction would be 1/5 in that case. So let's take one more example to understand how to calculate this loading thing. So in this example, A Limited invoice goes to its branch at to daily branch at a profit of 25% on selling price. It is given percentage on selling price. In the previous example, it was given percentage on cost. So whatever percentage is given on what, you have to see that. In the previous question, it was given profit percentage on cost. So we have assumed cost as 100. In this particular example, it is given that percentage on selling price. So let's assume selling price as 100. If selling price is 100, how to calculate the selling price? The formula to calculate the selling price is cost plus profit equals to selling price. So in this question, we have assumed selling price as 100 and the profit percentage is 25. So what would be the cost price? So the cost price would be 75. Now the question comes here, how to calculate the load on cost. To calculate the load on cost, the formula is again the same, markup upon cost. The markup is 25 here, which is given in the question, that is profit percentage, and the cost is 75 here. So it is 1/3. How to calculate the load on selling price? Load on selling price, simple. The profit percentage upon selling price, and the profit percentage is already given in the question, that is 25% on selling price. So 25/100, 1/4. This is really very important to calculate the loading before proceeding, before preparing the branch account at invoice price. So let's begin with this branch account at invoice price. How to prepare this branch account at invoice price? See, this is the format of branch account at invoice price. This is similar to branch account at cost price. We already talked about how to prepare the branch account at cost price in our previous lecture. So all the items of this branch account are same, but when we are preparing branch account at invoice price, you have to see the 4 items which are appearing here. The 4 items are opening stock, opening stock that is appearing at the invoice price. It is shown on the debit side. It is the first item on the debit side. So opening stock is well depicted here at invoice price. Then the next item, goods sent to branch, it is also appearing at invoice price. The next item, goods sent by any other branch. If it is given in the question, any other branch has sent goods to our branch, and that is also available, that is also shown here at invoice price. The next item which is shown here, it is on the credit side, that is pertaining to the goods sent to the branch. It is shown with the same name, that is goods sent to the branch only. So these are basically goods written by branch to the head office, and this is shown on the credit side at invoice price. And the last item which is shown at invoice price is the closing balance of stock at invoice price. This is shown on the credit side. So these are the four items which are shown at invoice price when we prepare branch account. Otherwise, all other items of branch account that remain same as we have done, as we have prepared branch account at the cost price. So this branch account, begins with the opening balances of all the assets which are given in the question, that is opening balance of stock. So opening balance of stock is always shown at invoice price, which if we are preparing branch account at invoice price. So all other opening balances are shown here, that is petty cash, debtors, or any other fixed asset if they are given. On the credit side, opening balance of any liability, if it is given in the question, that has to be shown on the credit side of this account only. The next item on the debit side is goods sent to the branch. These are the goods which are sent by the head office to the branch, and these are shown always at invoice price. The next item which is shown on the credit side, this is a very important item, that is all the remittances which are done by the branch to the head office. So you can see the item that is with the name by bank account, and it is written here remittances, and these are the remittances which are received from the branch to the head office. And these remittances means this is the total, this is the sum of cash sales on account of cash sales, collection from debtors, and sale of fixed asset. What does it mean? So branches are set up basically for further sale. These branches are set up by the head office. They work like an agent. So whatever sale is done by these branches, so whatever amount they have collected on account of cash sales, on account of cash collected from debtors, or any other sale like sale of fixed assets, so all the cash which are received by the branches on account of all these items has to be remitted by branch to the head office. So this depicts that. In my previous lecture, I explained you not to include all those transactions which takes place between the branch and the third party. So this is not about this transaction is not about the branch and the third party. These are the transactions. This means all the cash which is collected by the branch on account of cash sales, on account of collection from debtors, or sale of fixed asset, they are remitted to the head office by the branch. On the credit side, some more items are shown on this account, that is goods written by the branch. So basically in this branch account, you have to show all the items as we have done previously to prepare the branch account at cost price. At the end, you will be calculating this profit or loss of this branch account. Either there will be profit and either there will be loss, and this profit or loss will be transferred to the general P&L account, that is general P&L account of head office. So this profit will be depicted there only. Before proceeding further, you need to see one more important thing here. When the branch account is prepared at invoice price means this is cost plus profit. So in four items, that means these are the four items. In these four items, this loading is involved. That is in the opening stock, goods sent to the branch, goods written by branch, and closing stock. These are the four items which are shown here at invoice price, and in these 4 items loading has to be eliminated. What is loading? I just explained you. This invoice price means cost price plus profit, and this profit margin is known as loading, and this loading has to be eliminated by showing it on the credit side of this branch account. As you can see on the credit side, the second item which is appearing here is stock reserve. So this depicts the loading on the opening stock, and this is shown on the credit side. The next item, that is goods sent to the branch, on the debit side, the loading of this is shown on the credit side of this account with the name goods sent to the branch, and it is written there load on these goods. So after preparing this branch account, profit or loss will be calculated. Let's understand this with the help of example. A head office in Mumbai has a branch in Delhi to which goods are invoiced by the head office at cost plus 25%. So first thing which you need to see in the question before attempting it, that goods are invoiced by the head office to its branch at cost plus 25%. So means invoice price is cost plus 25. Let the cost is 100 and the profit margin is 25. The invoice price is 125 in this question. Unless until it is mentioned in the question whether these goods are at cost price or invoice price, we assume all the items which are shown here are appearing at invoice price. The first item which is shown here is opening stock, that is 12,500. So this item is appearing at the invoice price. And what is invoice price here? Invoice price is 125, cost plus 25%, that is 125. So whenever we prepare the branch account at invoice price, see, you can see opening stock is appearing at 12,500. So this 12,500, this is what? This is not cost price. This is appearing at invoice price. You have to remember one thing always, whenever we prepare branch account and invoice price, all the items would be appearing at invoice price only. So opening stock is appearing at the invoice price, which is 12,500, and the loading on this would be eliminated by posting this loading amount on the reverse side, that is on the opposite side, credit side. As you can see, the loading on this amount is shown on the credit side with the name stock reserve, and this is 2,500. Similarly, the second item which is appearing here is branch account. In the branch account is goods sent to the branch, and this amount is 40,000. This is also again at invoice price. Again, there is a need to eliminate the loading which is included. Loading means that is profit margin which is included here, and this profit margin is 8,000, and this loading is shown on the opposite side with the same name, that is goods sent to branch account. The next item is closing stock, which is given here 15,000. This is also appearing again at the invoice price, and again there is a need to eliminate the loading, that is profit margin. Opposite side, that is on the debit side, we would be posting that with the name stock reserve. You have to remember one thing. Whenever we are eliminating the loading in the opening stock and the closing stock, you have to show this loading amount with the name stock reserve, whether it is opening stock or it is a closing stock. But while eliminating the loading on goods sent to the branch, it would be shown with the same name. So at the end, we would be calculating the profit or loss which is earned by the branch account. In this question, the profit and loss which is earned by the this branch account is calculated. That is 13,100. So these are the 4 items in which you need to eliminate the loading part, and they would be appearing at invoice price. That's all for today. In our upcoming lecture, we are going to talk about the second method under the dependent branches, that is stock and debtors method. Thank you.